Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I've been thinking more about what Tesla's stock price might do this year, mainly based on what events might occur and how well Tesla will perform. Looking at the market, the Nasdaq isn't even lower than 5% from before all these macro issues started affecting the market, yet Tesla is still down over 15% over the same period. Microsoft, Amazon, Google, all more or less recovered, or are at an even higher price than before. Okay, sure, we can't say the same about the rest of FANG, what with Netflix and Facebook not doing as well, but Tesla also beat market expectations, and Tesla's stock price is still down 15%. Facebook had actually recovered since the macro issues too, before its crash, but not Tesla. Tesla's stock price had already been suppressed earlier with Elon selling a portion of his shares, but then the stock price never got a chance to breathe again after that. There was one thing after another, but now you might have thought it would recover a bit more, perhaps to 1100 a share even. Sounds reasonable, doesn't it? I think the stock price needs an event to give it a poke and get it moving again. We do have several major events that are coming up soon. However, other events that we had before hoped for this year will no longer be coming, such as any Cybertruck deliveries and compact reveals. Those events would have boosted the stock price, but it would appear for Tesla it's all hands on deck for the Model 3 and Y, which may not be great for the short-term stock price, but it's definitely going to be good for profits. And it's also a great sign of just how much demand there is. Like I said though, we do have some major events on the way. I know it's dragged on so long that it's almost too good to be true, but there will be the opening of these two new factories. Bear in mind this whole time, all these delays might not have resulted in any fewer Teslas being made, at least not a year or so down the road. Think about it like this. What will the bottleneck be? Batteries. Well, I don't think any of these delays or issues of these new factories opening are causing any delays in actual battery production. The 4680 line is not finished in Texas. The 4680 battery is not even built yet in Berlin. Cato Road is still making batteries. Any 2170 batteries not being used in Berlin yet can be stockpiled for later use. So eventually all these spare batteries will be used in vehicles, and the production of these batteries has not been affected by any delays, or at least not yet. Okay, so the event of a factory opening, surely that has got to make the stock price look very green. I would think a 5 to 10% increase in the stock price. It's a huge deal. I think it's just lost its energy as it's taken longer than everyone expected. It's also a great way of creating FUD. Anyway, they are still huge factories and the construction all seems to have gone well and in a reasonable time. We've also seen the production lines working in the factories already. We're even getting to see the new paint shop at Berlin in action now. It's all getting so close. And like I said, I think 5 to 10% movement in the stock. And I meant that per factory opening. This might get the stock rolling and wake people up a bit to remind them that, oh yeah, Tesla just built some really big factories. The Texas site doesn't stop there, of course, as those vehicles will contain 4680 batteries, so hopefully we'll get to see some of the new specs. Imagine if the Model Y has a range of 350 miles or something. There'd be headlines, new Tesla Model Y, record range for electric SUV, all sorts of things to boost the stock price coming from there. But by how much? Maybe back up to 1200? It does feel like we're still swimming against the tide a little. If these factories were open and these macro issues didn't occur, I would have put the stock closer to 1500. Anyway, as for the rest of the year, I'm not sure what there'll be to keep the stock price up, or give it much of a boost. Throughout this year there may be some dips, possibly even below $1,000 or lower. I think we'll be floating around $1,000 to $1,200 for most of the year, similar to how we floated $600 to $800 in 2021. That's still a 66% increase, by the way. We know there are not going to be any new car model reveals this year, no Cybertruck deliveries. Any other new product reveals will probably do the stock what they always do, drop the stock price a little and then nothing at all. But we might see some new battery products and perhaps an HVAC reveal, possibly even a humanoid robot demo. But these may not do much for the stock. I think at this stage, the thing that will inflate the stock price is the numbers. And that's going to be the issue for the most part of the year. The numbers are going to get hurt. All the profit comes from the auto business. These new facilities will cost a fortune to run, and the production for them will be limited. Even though the production lines may be all running well, we're still limited by chips and then batteries. However, with the levels of volume production we've witnessed from Tesla, the costs do start to dwindle. For example, whether Tesla's production line is 10,000 units a month or 40,000, a lot of the factory associated costs would remain the same, irrelevant of the run rates. and thus become cheaper per unit, the higher the volume, through greater economies of scale. And bear in mind, we hope with these new manufacturing techniques we're going to see at these new factories, we will be able to get to a higher level of volume production. After a while, these costs do get relatively small, even for these factories once ramped up. It might be 2 years' time until Tesla actually have enough batteries to accommodate these factories at their full run rate at this time. Remember, supplying enough batteries to these production lines is a moving target, as Tesla's run rate is going to be a lot faster in even just 2 years' time. Even just Berlin and Texas are going to be a huge jump in production speed, let alone cost. Therefore, Tesla might suffer somewhat in the market due to these extra costs from the new factories, whilst production is relatively low. There will likely be some good buying opportunities in the stock price, and I will share my latest strategy with you in a future video. These new factories are using new processes and techniques too. We could run into all sorts of issues. There is a lot riding on it, and a lot that could go wrong. On the other hand, Tesla have already been testing their production lines for months. After we get the Q2 financials for 2022, we should be able to assess just how expensive these new factories are to run and how much impact they've had on profit margins, at least initially. Therefore, the stock price could be sideways for most of the year, very similar to last year, but that's how the market values Tesla. Well, what about how we should value Tesla as a company or business that we own? What do we want to look for? Well, we want to keep an eye on the run rate we're seeing from these new factories. That's what will matter for us over this year. It's a shame chip shortages may play as a distraction of Tesla's success this year, but we should get to see a lot more revealed next year as to the true capabilities of these new factories. And this year should still see great growth from last year. We should see in the financials that the average selling price for vehicles should be increasing this year. We won't be able to gather potential margins of the new factories for some time probably, but I hope we will eventually be able to get a rough calculation. But EPS for the year might not grow much. I mean, we are stepping up capacity perhaps 4 times. That is a big jump. The fact EPS isn't dropping would be impressive enough. But either way, I can't see Wall Street caring that much. I think they'll be unhappy about dropping margins, but we'll see what I can come up with in my 2021 forecast. What about any FSD breakthroughs this year? Will that jump the stock? Personally, I don't think so. I think it's been said so many times it's really losing a lot of its value. I don't believe it could be a stock mover this year. I do think it's possible that we could see a $2,000 stock price this year though, by which I mean January next year perhaps, when we get the 2022 Q4 results. And I think there could have been some more successful ramping up by then, and also less stress on chips. And although the EPS may not be great for the most part of the year, we should still see deliveries increasing, and not just at these new factories. Don't take your eyes off China, or even Fremont for that matter. If people are expecting 2 million deliveries this year, then surely Q4 2022 would have to be around 600,000 to 700,000 deliveries. I think the numbers from Texas are going to be better than we thought too. Now Tesla are not spending time having to also add Cybertruck lines there, involving overly complex manufacturing and engineering. But instead, Texas can expand Model Y and eventually the Model 3. What if Tesla immediately start building a new fab in Texas, about the same size as the current one next to it, that was exclusively for Model 3s? And the current one is just Model Ys, and then maybe later one for Cybertrucks. Could there be that much demand for these cars? That's the question. But remember, Tesla will have so much more margin, enabling the ability to increase demand by simply reducing prices. But the fact the product keeps getting better and better means the demand will increase too, along with the entire EV and climate change movement. Then standard range versions to increase demand further again, and other software upgrades like FSD. And perhaps when FSD is 10 times safer than a human, then Tesla may charge $5,000 a year. Over the lifetime of the vehicle, if it's only 30 years, then that would be $150,000 profit. But like I said, 30 years. So this will take its time to accumulate, but it will become a lot of passive income. Therefore, any major profit from FSD will not be felt for some time, as it will take a while to catch up with the gigantic car sales profits. It's only when FSD is applied to robotaxis will it make a huge difference to profits anytime soon. For now, I think the way the market is valuing Tesla is pretty much as an auto company, and it's not surprising, given that about 99% of profits are coming from the auto business. Except this is the EV auto industry, where a higher PE ratio is accepted. Therefore, if you are wondering about short-term stock prices, it's going to be about how many autos Tesla can sell for the time being. If Tesla can reach 600,000 to 700,000 for Q4, which I think is possible, depending on these chip issues, which are hopefully just about sorted by then anyway, then with that many deliveries, you really would expect $2,000 stock price. Anyway, I should have my full price target for 2022 finished later this month, but that would be a net profit of over $8 billion for Q4. Just a very rough guess. I'm not expecting any massive breakout years until Tesla are reaching run rates of closer to 5 million. But I think this run rate will come much sooner than expected, hence why I expect a stock price breakout sometime before 2025. I'm then expecting the stock price to jump $3,000 to $5,000. But I don't have to tell most of you that. In fact, most of you tell me that. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.